Good morning, everyone, and welcome to the European crossover webinar. And we're seeing a relatively slow start for the FX. We have seen, though, move this out of the way. Bit of a pullback here in the Aussie dollar here from these heights that we were looking at, and we've got our analysis to go through, but we'll go on and take a quick look at what we have upcoming for economic data, which is relatively going to be a relatively light calendar. We'll take a look also what the overall outlook is. So, German wholesale prices have gone and come out. Got Eurozone industrial production. Now that will be out at the top of the next hour. And we do have building permits at 8 a.m. Eastern, as well as factory orders, durable goods, and new home sales. And we'll take a quick overview for it's called the morning bid. It states here British Prime Minister Theresa May will make a statement to Parliament today at 15:30 ahead of tomorrow's crunch vote on her Brexit deal. According to Sky News, separately, there are reports the European Union will, before that, offer a letter setting out assurances on the nature of the Irish backstop while insisting it cannot be renegotiated. At this stage, it looks unlikely that any such maneuvering will be enough to secure a victory for May on Tuesday, but it could limit the damage. Any defeat below 100 votes could keep her deal alive and set the stage for a fresh vote with new concessions as pro-Remain groups in Parliament explore options to prepare a second referendum. May's pitch to her Eurosceptic conservative critics is that in the event that her deal is scuppered, Britain is more likely to end up with no Brexit at all than a no-deal Brexit. In Sweden, finally about to get a government, September's election delivered a hung parliament with the two main political groups to form a government unwilling to list the support of the anti-immigrants Sweden Democrats. And let's just move on quietly in markets. The fragility of the world stock markets was underlined on Monday by a news of a shock drop in Chinese exports. We're going to get to that in the news. And imports in December, an ongoing U.S. government shutdown as the fourth quarter corporate earnings were set to hit ahead of Tuesday's crunch UK parliamentary vote on Brexit. Even though Japan's markets were closed for holiday, the week started with a gloomy tone elsewhere. Shanghai stocks lost 0.7. Hong Kong was down 1.5%, and Seoul was off 0.5%. And moving on, the dollar was lower against the Japanese yen and on its dollar index, but emerging market currencies were weaker in mass against the greenback. I saw some stories. I mean, this is where Zimbabwe is looking to go in and ditch their currency because of the shortage of dollars. Obviously, this has been kind of like on the back burner, but I was looking to see if there was any more further news. I mean, obviously, I thought the dollar was going to go and start to turn a little bit lower. It had, but we saw a good recovery on Friday. Now, the recovery was just at the key weekly level, which is 95.65. But moving on, it says after S&P closed lower on Friday for the first time in 6 sessions, S&P futures were down 0.8 first thing on Monday, and European stocks were down 0.5%. 10-year U.S. Treasury yields fell to their lowest since January 7th, and Brent crude oil prices fell back below $60. After surging on Friday on reports that the UK may seek a deal on the March 29 Brexit deal due to the likely rejection on Tuesday, it negotiated withdrawal agreement with the European Union. Sterling gave up some ground. And the first thing on Monday, as the vote was awaited and further reports surfaced that the EU was willing to reconsider a 3-month delay. So let's go on and move on. As I said, the one market that is holding up still relatively well, we covered that also, is look here at the gold market. Did state it's starting to look a little bit tired, but there's still an upside opportunity, but it's going to take a catalyst of a pullback. And I said, I did think I mentioned a strong pullback though in equities. We are seeing S&Ps off 20 handles here, so the door's still open for gold to try and challenge it, but it certainly has been acting rather tired here up at this level. But we're still hanging in there. Right there. We haven't given up the ghost, but last week we did look like a little bit of a gravestone doji, opening for a little bit of fatigue, I think I referenced, but it's still there. It's not that far away that we can, get some kind of push. And obviously, starting out with a weaker equity market, certainly may open the door for us to still remain up there. Whether or not we can push that 1300, we shall go on and find out. Looking at the euro, just relatively quiet here with the euro, and of course ahead of the big move, cable just dipping just a little bit. And so we'll just cover the quick news, and there isn't much to start with on this quiet start to the session, and then we'll jump into the analysis, cover the basic technical analysis that we'd set out over the weekend for the markets. Says the Aussie and New Zealand dollars beat the retreat on China trade blow. The Australian New Zealand dollars backtrack on Monday after surprisingly soft data on China stoked concerns of the protracted tariff standoff with the United States. That's taken a heavy toll on the Asian giant. Said China reported denominated exports fell 4.4% in December from a year earlier. Both badly missed analyst forecasts, a negative for the Aussie. Australia gave China its biggest single export market. The trade figures are immediately weighing on the commodity and equity markets and associated currencies, said Stephen Innes. Fairly damaging data should reverse this morning's rally on the yuan and other Asian emerging market currencies. A fresh test of the risk appetite will come on Tuesday when British Parliament votes on Prime Minister May's Brexit deal amid expectations the bill will be rejected. The defeat will mean May has just 3 days to come up with an alternate plan or risk crashing out of the European Union on the March 29th deadline. There were reports the EU might allow an extension of the deadline, which would support sterling and risk sentiment in general. And then just an overall recap, mentions again about the fallback in the Aussie dollar and the news with China. The yuan rally is largely due to the optimism surrounding the China trade talks at Oruk. While momentum suggests the rally looks unstoppable, the currency has little ground to appreciate further from an economic fundamentals perspective. Monday's risk-off mood led traders to buy safe haven Japanese yen, which rose 0.4 versus a greenback. With the Fed's reserve signaling a pause in the tightening cycle, we don't expect China's trade numbers to have a long-lasting negative impact on sentiment, said Chris Turner. The euro on Monday was relatively unchanged at 14.66. The currency lost 0.3 on Friday after data showed that Italy, the Eurozone's largest economy, was at risk of a recession. And gold prices rose on Monday as the dollar fell on expectations the Federal Reserve will not raise rates this year. The weakness in equities and the U.S. dollar appear to be providing support for gold. And I referenced this in the basic technical analysis that we'll get to, is that we're looking a little bit fatigued, but we need that catalyst, and that could be either, and I was saying, for the dollar to falter and go to new lows, or a strong pullback in equities. The markets feel there's a shift in the Fed stance, and it's more accommodative, and we are seeing dollar weakening for several sessions. The U.S. Central Bank had the ability to be patient on monetary policy given stable price measures. Gold is cautious ahead of data flows that might revise the recent very dovish outlook. Geopolitical risks have started to induce some safe haven buying. Investors are becoming increasingly worried about Brexit negotiations. At the time, there appears to be no insight for the U.S. government shutdown. And lastly, Eurozone bond investors exercise caution ahead of the Brexit vote. Eurozone bond yields slid on Monday after weaker Chinese data, and the threat of a new election in Greece increased risk aversion, while investors awaited further clarity in Tuesday's Brexit vote. Germany's government bond yield, the benchmark for the region, was quoted at 23/10% in early trade. Renee Albrecht, rate strategist at DZ Bank, said that despite the news flow, the bond trading was in stalemate ahead of the British parliamentary vote on Brexit on Tuesday. It doesn't know if it should rally or retreat, he said. Everyone is waiting for the vote, and afterwards it will have some high degree of certainty which could trigger a yield rise in safe havens if uncertainty is lowered. The future path of Britain's exit from the European Union is uncertain, and its parliamentary is likely to vote down Prime Minister May's possible outcomes include a last-minute deal and a disorderly exit. Non-Eurozone bond yields rose in early trade, and the threat of new elections in Greece kept upward pressure on bond yields, with 10-year government bond yield opening at 4.28. Prime Minister Tsipras said he would call a conference vote in his government after the coalition ally quit, leaving him bereft of a parliamentary majority and raising possibility of a snap decision. Greece is expected to bring a new syndication to market soon, but further political uncertainty and any rise in yields may skew its chances of a new deal in the short term. So let's go on and move on to the analysis. And like I said, we're keeping on markets are relatively quiet. The euro's a little bit, like I said, it really was a disappointing action last week for the bulls, but let's go on and get into the analysis quickly. So it says last week, a disappointing failed breakout for the bulls left the market tethering at the breakout level of 1470. Euro is now vulnerable to a bearish challenge of 1422, which confluences with 1434, the 38%. We'll go on and take a look here how it played out here with the euro. And at the start of the week, you can see, well, this is what I was talking about right here, tethering at this breakout level. This is a breakout level that got things going and really had, the possibility for this year to start to move higher, because one of the things we've mentioned over the last couple of weeks is this whole area. We've been sitting here and just, basically, almost working like as if a corkscrew, and when it breaks, is going to break. Well, it certainly looked like it was going to break to the high side and push even further. And then we just had a big thud. And it was really a disappointing, action to close out the week for bulls, when it looked like everything, we got above this. Show this here. We got above this 1470, this breakout. It was a strong breakout too, and it looked like we're really going to start moving and clipping along, probably make it at least up into the higher 116s. That probably looked like how that was going to play out, especially after this. Was it a mild breakout? It was a strong statement, if you think about it, above this 1470, only to lose it and then further lose it, in Friday. And as I said, we're tethering right here on this breakout level, but the door has been open, as I said, for them to potentially come down here to 1422. Things are a little bit quiet to start out because, got the Brexit vote coming up, but the door is really open here to fall down here to 1422. We'd mentioned here. $14.34 is at 38% of the move from 12.16 to 15.69. And you can see that right there, the 38% here. So you have some confluence in here. And to me, I'm just going to we're right here at the 1471. I guess on a short-term basis, we can just go with this 38%. But this is where the support comes in. We're looking at 1422. So we'll go 1435 to start out the day. And take a look at it on a daily chart. Not daily, but I apologize, but for a 2-hour chart. Here's that key level here at 14.99. That may be a little bit too close here. Although I think that at this point, with the action that we saw on the Friday, disheartening action for bulls, I think that it's going to have a bit of a tough time to trying to get anything going higher. For us to move higher here, but we've given up so much. Let's take a look at it here on the 30-minute. And certainly still in this sell mode here in the 30-minute, although very quiet action here. If we are able to get a little bit of a stretch, we'll call it right there at 1509. If we're able to get a little bit of a rally, so we'd call it 1509. As I mentioned, we're tethering on that daily breakout, so we'll just move this from bullish just to range for now. Now let's go move into the cable. Says cable finished the week above initial resistance at 28.24. This allows a test of the resistance at 29.36. Initial support comes in at 27.37. Well, obviously, a lot of big, I don't want to say big news, but obviously it is big news, but we'll certainly have the potential to jump all over the place in this market. But that being said, we were able to get just above this area right in here. You can see here coming across and close smartly again for the week. That being said, you almost have to think it's going to be relatively quiet ranges ahead of what could be a bit of fireworks, to say the very least. But it has opened the door from this challenge to open up to 28.76, and that's where we're going to go right there with our resistance right here at 28.76. I'm going to go and take a look at the 2-hour chart here for support. Boy, we've had, fantastic, rally off of these lows. But, who's to say what kind of fireworks we're going to see coming into tomorrow or after tomorrow? We mentioned our initial support coming in at 27.37. Yeah, we'll go with that for 27.37. And taking a look here at the Aussie dollar. The Aussie dollar has rallied into resistance level 72.33 after a 500 pip rally. Fibonacci target is 72.76. It's at 38%, which confluences and mentions here that range here with the daily support coming in at 71.38, 71.38. Well, we've seen a little bit of a pullback on those very soft Chinese figures, but I tell you what, it's still, despite the pullback and a decent little pullback, when you look at it in context of that 500 pip rally, it doesn't look like it's much at all. But we have slid into a little bit of a sell mode here with the Aussie dollar. And, the concern is going to be after this Brexit vote, I guess, the whole idea about risk sentiment. We're going to see how this plays out, but certainly the S&Ps have pulled back. Not a whole lot. Like I said, when we came on hand, we're about 2022 handles lower. We'll come back a little bit, allowing the Aussie to pare back, but certainly this thing remains in a buy mode after the move that we had seen. That being said, when you look at it here, there we go. You can see the significance right here at the 72.32. They made that run, and just above that is at 38%. But you think about, once again, is how far we've rallied. So, honestly, it looks like he's just barely slid a couple of pips almost compared to the rally that we've seen here, but certainly remains in a buy mode. Resistance is going to be right here at 72.33. Key daily level. And we'll go to the 2-hour for some support. We've already dipped into this area right there. You can see these touches coming across. This is right where it came into. We're going to go and stay with this right here. I mean, it came right into this level and it's held it so far. Not that we're that far above it. And you would think that the market is open to dipping a little bit further. But we'll go right here where we're at, which is the 71.80. Looking at the Kiwi here, we had a nice little rally also in the Kiwi. We have come right into this 61%. Got just above that, and we're starting to struggle a bit here. Maybe an area to just pause a little bit, a pause to refresh. And that 61% comes in at 68.22. Let's take a look at it here on the 2-hour. You can see that coming right across there. See that? 68.19. Well, we'll go with that 61%. Being the 60 right there. We'll call it 68.23. So we'll mark this off as our resistance. And we'll use a fib to see if we can go in and get some confluence here. There's some support coming. The 38% is going to come here at 67.46. But before we get there, should be a little support coming in right there. We'll actually go right off of this one here. That would take us to 67.63. 67.63. So we're talking about just a little over 40 pips away. And on the dollar CAD, the dollar CAD suffered a relentless fall as crude oil correspondingly rallied. The pair bounced off initial daily support at 31.96. Stronger support comes in at 31.53. Minor resistance comes in at the 33.06, followed by a major level at 33.49. Confluence with the 38% at 33.56. Well, a lot of numbers to throw out at you. Well, let's go and take a look at what we saw here, or what we looked at this daily chart. So we came into some support here at this 31.96 area coming in right there. Some minor support. The support that we're talking about, strong support comes in. You can see that clearly at this 31.56. This dollar CAD has been something, or I should say the Canadian currency has been something else, and a relentless fall. It has been just that. Obviously, this came on the backdrop of the move that we saw here in crude oil, which we saw a pretty nice rally back here in crude oil. So certainly that had its impact here with the dollar CAD. Now the resistance that we're looking at comes in right here at 33.06, and well, actually you can see that coming right across here, 33.06. We're going to use that right coming in right there at 33.06 as our resistance. We'll look at it a little bit closer on the 2-hour chart, but you can see that resistance coming in right there on the daily. It's going to be 33.06 as we noted in the analysis. Let's go into the 2-hour chart, see a little bit closer look on this. You know, we made it, look at that, 32.98. So they were still pushing this thing even further. I sure am glad I got the heck out of Dodge. I had actually taken a short, a couple little shorts there. Right, it was at it was what, 33.50. I mean 32.53 and 32.71. Actually, when it went right into that little resistance level, right? Oh, there we are, right there, and it just wasn't giving but that much back. And I was able to jump out with a few pips, but wow, they even pushed it even further, almost all the way to that 33.06 we're referencing, getting up as high as looks appear to be 32.98. We're seeing a bit of a pullback. This market is a bit stretched. Looking for support. Let's go and take a look here. It's going to come in right there. Looks like 32.39. There we go. 32.40. 32.40 for support. And let's go and take a look at it on a fib on this pullback, if we can get this to ease back further. 32.52 would be the 38%. We're looking at 32.40. So maybe a little bit of a bounce back, because if you think about it, 32.52, that's going to be well off 100 pips. If you think about that. Now, 32.40 is we're going to see a little bit more solid support, and that actually comes in right about the 50%. So maybe, as I said, that might be a little bit asking for too much on an intraday support to make it all the way that far back, unless we see a real pull down in crude oil. For initial support, we're going to look right there at 32.55, and that's already that's that same area. So I really would expect it to push back a little bit further. I'm going to stay with our initial, which was right in here. You see this coming across, and it's going to be 32.40. 32.40 for our support here for the dollar CAD for today. You see a little bit stronger pullback. There we go. With resistance 33.06. We almost nipped at it, got up as high as 32.98. Certainly this market remains bearish. A bit oversold. We've seen a little bit of a rally, but we're certainly still bearish on this. Nice pullback here in the dollar Swissy here on the snapback. You know, this market was up and down all over the place. We talked about this well over a week ago. You remember I remember referencing this: look down, then the next day strongly up, then strongly down, then strongly up, then strongly down. Really didn't know which way it wanted to go in and break. We were able to break and come down here just beyond the pivot here at 98.02. We'll come back. You know what? I just don't have a good take on this market whatsoever. Looking just at plain old resistance here, though. Be coming right across here, right there. It comes in at 98.70. Now take a look at here on the 2-hour chart. That's a good strong resistance right here coming in at that right there, 98.51, 98.51. We're just going to go with the technical level right there, which is 98.50. Well, we already had that marked off before, 98.50, and that's right where it kind of ran out of gas there. Now on a pullback, we've had a pretty good strong upsurge here. Look at that, just a lot of short covering. Although the dollar certainly with it when it saw its rally come back on Friday, support. We got 97.93, and let's take a look at this on a fib. 9802. Well, that's the bias pivot right there, 9802, which corresponds with the 38%. We'll pull this back just a bit further right there. 9793. Right there, 9793. After pretty good sizable run up, maybe we see it pull back a little bit. So and 9802 would be the bias pivot. Once again, like I said, we'll just pull it just a little bit lower, 9793. And we have seen this dollar yen pair back a little bit further now. Let's go on and take a look at that analysis. The dollar yen pulled back 100 plus pips after falling short of challenging the bias pivot at 927. Remember how they were just sitting up there, actually even just right below 109, like 892, and was just hanging there. But it says initial closing resistance on the bounce back is 876. Medium downside target does still remain 676. And we'll take a little bit closer look on this. So there's that bias pivot there at 927 that we referred to. And we're actually, at one point we even got up to here, look at that, to 908. Looked like, if they want to try and break above that, they might even try and challenge up to 950, which is the 50%. But once again, it would take a couple of closes above 927 to actually negate this whole downside action. We're starting to slide back here in the dollar yen. And we're looking for a medium target of 676. As we mentioned, initial resistance comes in right here at 876. We'll take a look at it on a 2-hour chart. Well, this is a resistance I believe we had from Friday. 855. And that's where the market ran out of gas. Right there. Until we can change things around. I mean, look, we were holding initially. We were saying, hey, look, starting out the week, if they want to hold it steady up in here, they just pull back just a little bit. 876. Well, you got to get past that 855 before you do anything. So we'll keep in, at least for now, with this pullback, 855 from Friday's resistance. That will stay the same. We did have 818 as our support. Well, the market did dip down to about, what was it? Looks like 804. And we're just kind of hanging around here. Support. It's going to come in at 789 for today. Not that far away, 789. But we do have a downside target, a medium downside target of 676. Refined that a little bit. I was looking before around 685, right around there, but 676 is going to be the downside target, medium downside target I'm reflecting to. And you can see the level where we get that right here coming across here in the daily. So 676 for a medium downside target on dollar yen. And we'll move into the dollar. The dollar index closed at the prior week's broken key support level of 95.65. The upside challenge target is 96.05, and that corresponds with 96.08 being the 38% here. Confluence with that level, as I mentioned, 95.08. Initial support comes in at 95.27. So let's take a look at the daily. Here's that key level from the prior week that we saw a very nice bounce back from the, as I mentioned, from the prior week. Saw that strong bounce back. We're talking about this, that we thought this was going to be on very light volume coming back up. The door had been open for us then to work lower because I thought, like I said, that a lot of bulls had paired back. So I thought this was going to be a very light volume and opened the door for us to push lower. And push lower we did. We challenged and broke below that 95.65, opened the door for a challenge lower. But lo and behold, we made this run right back up late on Friday, although closed right here at the broken support level. So we'd have to go and get a sustained move above that. But like I said, if they want to push it on a short-term basis, we were looking here at potentially, if they were going to try and push this dollar a little bit further, because certainly we had the bears under pressure at that point, would open up an upside challenge here at 96.05. That's confluence in here with 96.08. I've got it listed at 98, but it's 96.08. We'll take a look at this a little bit closer on the 2-hour chart. So you can see that 96.05 being the 38%. And 96.08 right here. That would open it, but like I said, this is that key level from last week. You can see that nice sharp rally back that we saw off of that 95.65, and then they'd come down here to challenge. When they broke below that, really opened the door for some downside momentum, even further than what I thought was going to go to. But we saw this rally back in here, and if they were to go in and garner some further strength with the dollar strengthening, i.e. would be the euro weakening, then the upside challenge target would be then this 96.08 confluence with 96.05, the 38%. Short-term basis, well, resistance on a very short-term basis is going to come in just above there. It's going to be 95.84 on a short-term basis. And support, well, you see it right there. We mentioned that in the analysis right there, 95.27. So keeping it relatively tight. And just as the euro was flipped to range, we'll flip the dollar index to range also. This whole Brexit thing kind of has everything in Forex, for the most part, not everything, basically on a holding pattern. So let's take a look at gold. So it says, after several attempts for gold to break past 1,300, fatigue is setting in light of the dollar's rally on Friday. Initial support is 1281 with resistance at 1296. The upside is still open, but we'll need a catalyst, i.e. a strong equity pullback or a dollar falter to new lows. Well, that catalyst may also come in the play of the Brexit. That might even, the market may decide to latch its wagon to that one. And we'll still have that bit of an upside bias here. Things haven't changed as we talked about before. Is when you look at this on the weekly, there's been a lot of epitaphs written for the gold lately, but when you look at it, and certainly, when you look here, it certainly looks like it's acting tired. But once again, what we've been talking about, anyone that was long, each week they're getting paid. So even for the prior week, okay, this week, but still the same thing. As long as you're long, you're still getting paid so far. So we have to see a pretty good reversal in order for this momentum to change. And certainly gold has, even though it's come quite a ways, I don't think it's come to the extent you would have thought in light of the disaster we've seen in equities. Like I said, I would have thought gold probably would have been closer to around 1374. Not that that's making a case that it's going to make that run up there now, but I'm just saying it's not, we have come off the lows, but as I mentioned, weekly, it still continues to move a little bit higher. Even if it's only a little bit, it's still moving higher. Okay, so you're going to have to see, a reversal, get this thing turned around. And that catalyst, well, if we see the S&Ps pull back here or the dollar falter, one thing I didn't mention, who knows, maybe they'll latch their wagon to the Brexit. But we're certainly close. I mean, we're not that far away. Once again, like I said, if you've been holding gold and you're waiting for a reversal, you haven't seen it on the weekly chart yet. So the door's still open. We mentioned 1296. So we'll keep 1296 per the analysis here for resistance. And there it is. Still remains. Mentioned 1281, looking at it from a little bit longer term basis on that daily analysis. Well, and there's a 1281 right there. So we're going to have to get past 1281. If we're looking on a intraday basis, on a 2-hour chart, comes in right there, 1286. And when you look at it on a short, on intraday basis, resistance is actually coming in right there at 1297. So we'll adjust it. On the daily, we're looking 1296. So you can see right here in the 2-hour, 1297, 1286. Well, there are no changes here other than to move this $1 higher. Well, we saw in the morning review getting Boone's move up a little bit higher, and the funny thing, not funny thing, but they're saying they don't know whether to move higher or whether to move lower. We mentioned here the Eurozone bond investors exercise caution ahead of the Brexit deal. But the thought was, as a gentleman mentions, it doesn't know if it should rally or retreat. Everyone is waiting for the vote, and afterwards we'll have some higher degree of certainty, which could trigger a yield rise in safe havens if uncertainty is lowered. Well, I think we're just expecting quite a bit of volatility in light of this whole vote, and they're pushing the Bund higher because that's where the momentum is taking us right now. And you're looking at there on the 2-hour chart. We're just a hair above this breakout point that we had referenced before, the 6410. We'll take a look at it on the daily. See right there, just a hair above this area here. They had fallen back and actually now started to reclaim. Obviously, this Brexit vote is spooking quite a few people. We're going to move this into the 2-hour once again. A little bit of a resistance level coming in right there. You can see it's 64.23, which is right where we're at. called 64.24. But really, the door's open for them to move higher. But we're going to go with the levels, which is going to be 64.24 on the resistance. And support's going to come in right there at 64.02. Just below this breakout level of 64.10. And resistance coming in the bonds comes in right there at 46.17. And we'll take a look at it on the fib. And 46.14 is at 38%. We'll go with that, 46.14 and 38%. It's not that far away, but as I mentioned, with the whole Brexit thing, we'll see if we have a run into some safe havens. We'll go 46.14 is at 38%. And there's going to be support coming right across it. 45.21 for the bonds. And let's take a look at the DAX. Well, we challenged at 972. I think we actually had that listed for the last couple of days. Yeah, for 2 days, I think we had that listed as a high. You would think that with the uncertainty, it's going to have a little bit of a tough time moving higher, and that resistance is going to come in right there. Looks pretty solid there at 898. Let's see if we can see some confluence here while using the fib. We're just hanging around here at this 23%. 713 is going to be the 38%, but that'll be a pretty good little fall. Initial support's going to come in right there. $769. And if you move this to 30-minute, you can see we've been in a sell mode for quite a while right here. We came back up here to rally. The exponential moving average, no crossover, so we continue to remain on a sell mode, and we continue to push lower here. So the support is going to be 769. Euro remains a little bit under pressure, but as I mentioned, and here's the dollar index right there at that. Look at the gold's still holding pretty steady here, but cash dollar index, look at that, holding right here at the prior weeks, which was support, not this last week, but the prior week before that. Saw that strong rally off that. Well, last week we broke it. Now we've rallied back to it right now. So same thing what we mentioned about the euro tethering at support at the breakout level. Well, the same thing here with the dollar index. Well, here's the euro. We see here we came back down here to the breakout area here. We're just pushing a little bit below here. Here's the bias chart. I'll get that posted in the room, and good luck to everyone. And thanks for joining us here on the European Crossover webinar.